Hi, I'm Chris Smith. I'm a property investment consultant. This YouTube clip, we're going to be highlighting a few property deals that I believe is worth your attention and your time on researching. These are properties that are going to be rather significantly high in returns, below market value. I do believe it's a buyer's market at the moment, especially with the doom and gloom surrounding the mortgage interest rates. But yeah, enjoy this clip and we'll crack on with it. Yeah, if any information on the properties themselves, you'll have a chance at the end of the clip to send me your details or pick out the property you're interested in, and I'll email you all the information. But yeah, other than that, let's get on with it. Thank you. So before we get in to our property information, there's going to be a couple of property options I'm going to highlight in this clip. But firstly, I want to touch on what my property investors are doing at the moment. I've got clients that I've been working with for the last 10 years, investing in different models in different properties, and we have had it quite easy as well, is what I would say. We've all had it quite easy with those low interest rates over the last couple of years. But significantly because obviously those rates have increased, my investors at the moment are sort of transitioning onto lower price properties, especially those that are cash investment and that are generating a significantly high return. Cash is king at the moment, of course. Without lending, you can simply sit on the property and enjoy those high returns. Now, I know there's a lot of savings accounts out there at the moment that are offering between 4-5% interest that sort of tie you in for years. But there are properties, in my opinion, that can significantly beat that interest rate in a savings account. So for me, is property still a time? Is it still a time to buy property? Of course it is. As long as you're buying a property that's significantly rather below market value or generating a significantly high return, is my recommendation at the moment. If you are looking or planning to buy a property with a mortgage, I would still keep those property values or looking at prices well below that £170,000 mark. The reason being, as soon as you start to inflate the price above that, like the Midlands in the city centre of Birmingham or Manchester, even parts of Liverpool now, you're finding properties at that sort of 200 and above price. Then yeah, then you do run into the risk of significantly, feeling the brunt of the market crash that we're currently in. I mean, let's be honest, we are in a market crash. We are starting to see prices drop, especially on the higher valued units. And it is a buyer's market at the moment. So now is the opportunity to snag yourself properties that are genuine below market value because you can negotiate a deal or get a discount or buy properties with cash that are generating a high return. Now, as I mentioned, we manage all properties that we sell. Opposed to the student properties, of course, we do tie in with universities that pretty much run the show for us. But a lot of the properties, genuine buy to lets or, traditional buy to lets or serviced accommodation, your Airbnb type of properties, we've been managing them for the last 20 years. Now, for those that are not familiar, we've just started our own new website called guests.co.uk. This is guests spelt with a Z, as you can see from the slide. This is a whole brand new website that basically marketing all the properties that we currently manage on short-term lets. This is holiday lets and serviced accommodation. Now, if you're not too familiar with what serviced accommodation is or holiday lets, if you do have a look through my YouTube clips or YouTube channel, you will see I did a complete video run through on what serviced accommodation is. So at the moment, like my investors, what they're doing at the moment, I would always advise looking at cheaper end properties that are still going to give you that decent high cash flow return. Fully managed, which would benefit you even more, especially if you're out of the area or you're out of the country. We can help with that from start to finish. But yeah, hopefully we can you make sense of that. And yeah, let's crack on with my property recommendations for this month. Enjoy. So, kicking on with option number one. Now, before I get into this deal, it is a very unique deal. Not many investors are familiar with this one. It's called a back to back purchase. Now, I will get into the ins and outs of it, of how it works, but to highlight initially, this particular property deal is 18 apartments situated in Chester. If you've been following my previous YouTube clips and my emails, you'll be fully aware that we've just launched these apartments within the week. I think 50%, over 50% have sold already. There are two car parking spaces available as well out of the seven that we had. Those are £5,000 each. But the two units I want to discuss with you today is a ground floor unit, £105,000, self-contained studio apartment, unusually large as well for a studio with a separate kitchen, and its own entrance, and it's got outside space as well. No other apartment in the block does have outside space like this one. I have constantly keep getting the question about pets. The lease does prevent you from having pets on this site, but for this particular one, because you've got your own outside area, there is a way of if you wanted to take your own pets, you probably could do. But if you don't want people to book your apartment with pets, of course, we can abide by the lease on the management side. So it's £105,000 unit. It can come with parking, which would mean you would be paying £110,000. It's a cash only deal. It is a back to back purchase. Well, I'll get into the payment plan in a moment and how that works. But yeah, significantly good unit, good size unit, one that you could probably look at leveraging in the future should you want to look at doing in that once the rates calm down. But a beautiful site. It was built in the 1800s. It's not a listed building, so there's no worries in terms of the regeneration side of it all and the works that are going to be carried out there. But it's completed and it's already tenanted. I believe the rents, because I've got another unit that I want to recommend there, which is Unit 9, but the rents vary from 375 upwards of £450 a month. Currently already tenanted. Now it does need a facelift, it does need a redecoration, and some of the appliances, etc., the kitchens, the bathrooms, do need an uplift, including the flooring, the walls, the lightings, the bathrooms as well. But yeah, the second unit is Unit 9. That is situated on the second floor. Now, their asking price is £90,000 for this one. Stunning views outside of the front of the property, looking over North Wales, which is quite a scenic look, and Chester City Centre itself, because you are on the doorstep of Chester City Centre. And again, as you're fully aware, some of you may be aware, we're based in Chester. We've been here for over 20 years now. Now, although we're managing quite a significant number of properties in different areas of the UK, including down south and the northeast, northwest, but Chester, we know it like the back of our hand in terms of what properties work and what properties don't work. So these particular units are going to be one that you buy with cash and sit on a return. Now, we're on an 81% occupancy rate in Chester. We use partners such as the NHS, which is Chester was the first place we established our partnership with the NHS during the COVID period. They use a lot of our properties in Chester, relocating nurses and doctors in that area. They are very short on accommodation when they are relocating staff. Same with the Shell fuel supplier. And other businesses we use as well, that not many of you will be aware of, but the local businesses that we use our short-term let apartments. So 81% occupancy is our current performance in Chester alone. So this should give you a good idea on our performance and what sort of returns you can expect on these two units, which works out, if you're looking at the slide, between sort of a 10-11% net yield, basing it on what we're achieving right now. But if you was to go even lower than that, just below 10% net on a lower occupancy, is what you should be expecting. And for a cash investment of £90,000 for Unit 9 or £105,000 for Unit 2 on the ground floor, it's a significantly good return. With no concerns about mortgage interest rates, no concerns about the management. We'll look after you in terms of the management. And yeah, let's kick on to the payment plan. So a bit more unique. Investors will be putting down 85% down on the purchase price of the purchase price, then 7.5% further payments once the developer who's going to refurb the site, once you've got vacant possession on your unit, and then the following 7.5% on completion. Now, before we get into the returns, the works that are going to be carried out are obviously an uplift to the building itself, the exterior. It's got beautiful gardens as well. I mentioned Unit 9 on the top floor. That does overlook North Wales, beautiful scenic North Wales, and of course Chester City Centre itself. It does look over that as well. Now, as I mentioned, there's going to be external works to the building, a complete new facelift with new paint, of course, new painted walls. That's also going to be happening internally as well. The kitchens are getting an update, new kitchen appliances, as well as fridge freezers, etc. New flooring throughout, lighting fittings, new uplifts to the bathrooms and communal areas. So this is why it's structured the way it is, why you put down 85%. So you're officially buying the apartment and completing on the apartment of 85% of its value. So 85%, for example, of the 90 grand on Unit 9 is this, and obviously, of course, 7.5% is then this, and then 7.5% on actual completion of the works. Now, all in all, if you're asking yourself how long this is going to take, so if you reserved a unit today, it would take you roughly between sort of 4 to 8 weeks to officially complete, exchange and complete contractually, of course, with your solicitor, whoever you choose to represent yourself. And then once you're happy legally, we'll then complete on the 85%. The developer who's going to be doing the works will then deal with the tenants and getting them vacated. It's a 2 month period because of the new changes last year in tenants because of COVID. So it's a 2 month notice period that the tenant must leave, followed by of works of 8 to 12 weeks is the timescale. So roughly 5 months, all in all, until you start earning a significant return on short-term lets. It's going to take you 5 months. Now, during that period, as I mentioned, that first 2 months of when the tenants are looking to vacate, you will be receiving the rents as well during that period. It won't go to the seller. You officially own the apartments by that point, and that's how it works. So it's named a back-to-back purchase. And we've worked with this developer in the likes of Living, if you've been watching my emails in previous launch, and we've worked with him in Settle as well. Very similar setup to this. It's a very safe, straightforward way of purchasing a property, and I'm sure if you do choose a solicitor, they'll give you the ins and outs of the information as well. So that's the plan with it, to uplift it and then allow us to manage it on our serviced accommodation model. Option number two. This particular deal is situated in Liverpool. Now, it's on the doorstep of the city centre of Liverpool. The area it's situated in is on Devon Street, not far from the Liverpool University Hospital, as you can see from the map. The reason I say that is because this is a student property. Now, I will get into what people frequently ask me on student property, but this particular deal, the reason I'm highlighting it is it's a very simple, low cash investment deal that can generate you a high return. Fully managed, fully furnished, and ready to go. It's already got a tenant in place. Now, the returns it's generating is around sort of 7.78% net yield after all cost service charges and ground rent. The building itself, the units were completed back in 2016, and it's been tenanted ever since then. Now, touching on the price, £35,000 is all they're wanting for this unit. Now, it is a very unique unit. It's not something really I've been involved with before, but it's an ensuite room. So it's a bedroom, as you can see from the video, and you get a bathroom with the unit. You do share with the other investors the communal facilities such as the lounge and the kitchen. So very on the lines of shared accommodation or shared investment, on the lines of that. But you do own that particular bedroom and the ensuite bathroom. But yeah, in terms of like with all questions I get on student property, the commercial elements, student properties, even if it was a self-contained studio, the value of them is based on its return. So if you came back to me in 3, 4 years' time, as we all know, rents are flying up through the roof at the moment, especially in the student sector. If you're looking at recent news reports, there's a huge demand right across the UK for student accommodation. And it couldn't land at a perfect time, really. It's the reason I've recommended this unit, because I think at the time that we're currently in with the interest rates, the 4 or 5% bank rates, the savings accounts that our banks are offering you at the moment to try and lock your money in, it doesn't get any better than this. 8% net yield and the chance of future property price growth because of the rents. That's how it grows in the student market, unfortunately. It doesn't really move like the residential market. At the same time, it does make it Brexit proof. It does make it COVID proof. The values stay the same because it's based on the rents. Just like buying any business, you'd be looking at the turnover per year. So as I mentioned, £35,000, fully furnished, already tenanted, and yeah, generating at a close to an 8% net yield. The rents haven't increased much over the last 12 months. The investor was happy just to keep the tenant in there as it was, but there is an opportunity here to get those returns increased to around the sort of 9% net mark. For a traditional let, I think that's an incredible return at the moment, because the option for this month is again going to be covering the student market. Now, if you've been watching my previous YouTube clips, obviously congratulations to the guys that have bought units at One London Road. I've got a unit here that's significantly below market value. Most of the student properties I've sold at One London Road over the last 3 or 4 years have been close to the sort of £70,000, upwards of £85,000. Again, depending on its return. But I've got a unit here. It's situated on the ground floor. It is a disability unit. So for the students that have got disabilities, they will be accommodated in this particular apartment. As with all developments, especially catering for student universities, they do need to provide disability units as well. Now, it does make them a little bit different. The bathrooms seem to be quite larger than a normal traditional unit, but it is a self-contained studio apartment. Now, the seller wants £60,000. There is scope as well to increase the rents on this unit, but it's generating a comfortable 7% net return. Now, One London Road, if you've watched my previous videos, there's a massive demand for student property. I mean, it's all over the news reports. If you Google Stoke-on-Trent and student accommodation and news reports surrounding that, but you'll see students are actually crying out for accommodation. And there's actually students who have got courses and they don't have accommodation, not even HMO properties, they don't have enough accommodations for them. So rents will significantly increase for the year of 2024, especially 2025, when we do see the brunt of the growth of rents. But it's a self-contained studio on the ground floor. As I mentioned, it's a disability unit, so the bathrooms are larger than normal. But yeah, it's a very simple, straightforward purchase, like option number two, for £60,000. They might be open to an offer. I've not really tried. I've not gone down that route yet. It's pretty much brand new on the market. But if you are interested in that particular one, it is already tenanted at 7% net return. If you're interested, let me know. As you can see from the image at One London Road, this particular apartment is in block 5, which is on the bottom right hand side of this picture, in the grey block. It's right across the road from the hospital university, so you will get medical students. A good 80% of the occupants at One London Road are practice nurses, practice doctors, so that's likely to be your tenant profile for that particular area. Now, the rents, I think, vary between sort of £140, £145, £150. As we've seen, all properties have been accommodated now at One London Road. This particular block, I've seen rents now reaching highs of £175 a week, which would make this investment, if you was to copycat other investors at £175 a week, you're earning well over 9% net return, well over. That's after all costs, again, fully managed. A little bit difference with this one, you are buying a fully self-contained unit, you're not really sharing with anybody else. But at a price, of course, £60,000. And this site is accredited to the hospital university. That means you're eliminated from Rightmove, you're eliminated from Zoopla, even on the market as well. Universities, as soon as a student enrolls at the university, they are placed into your apartments. And that's how the model works. There are student ambassadors on the ground who do the viewings. They have literally just had a student intake in the last few weeks. August, September is the busiest month, especially down here at Stoke-on-Trent, is when they have the massive student intake. And yeah, they've already got all that covered for you. So it's not really something, well, all units, all three options, you wouldn't have to concern yourself with any management issues. The student pods, we look after you. Will the university look after you on that front, or the management teams in between? And with the one at Chester Heights, of course, we're going to be managing on short-term lets. So it's in our sort of invested interest, not just to perform, but to also look after you. If you are interested in any of the options, contact me on chris.smith@propertyinvestmentcontacts.com. Just send me the option you're interested in. I'll send you all the research and details for you to dig into. Obviously, of course, doing your own due diligence. So yeah, send me the option you're interested in and your contact information, and I'll get everything sent across to you. Apologies, I've not been keeping up to date with these videos. I have been on holiday recently. If you've watched my previous YouTube video, I was at Centre Park with all 4 children. It was a nightmare. A lot of activities, a lot of cycling. Great for the kids, but I was absolutely shattered when I got back. I feel like I need another holiday just to recover from that Centre Park's holiday. But yeah, hope you've enjoyed the clips. I will keep you up to date every single month if you do click a like and a subscribe. Finally, I am obviously an ex-army guy. I've been to Afghanistan. And for those soldiers or people out there that have been in the forces, if you do need help or looking to seek a bit of advice in life in general, or bringing awareness to mental health, do get in touch. You can receive all the help from Heroes charity. As you can see from this website link, there's a contact number there for the Samaritans for help with all veterans, and yeah, or you can send them an email if you prefer doing it that way rather than a phone call. But yeah, do reach out, get in touch, especially with the awareness of mental health. I do a lot of work in that down that sort of route. So yeah, hope you've enjoyed the video. Take care, and I will hopefully be in touch next month. Thank you.